The Federal Housing Authority, also known as the FHA, is the largest insurer of home mortgages in the world. And it's extremely important to first-time home buyers because of its favorable loan requirements, including low down payment options. And I'm excited to talk to you about this topic today because FHA loans have helped so many people, including myself, become first-time homeowners and start to create some generational wealth. From a bird's eye view, there are two things that need to be approved by the FHA. So in this video, I'm going to break down both of these areas so you can get a better understanding of this loan program. I'm also going to show you how much money the FHA will give you for a particular home and what you have to do to get it. Hi, my name is Trenten Ward, and if you enjoy this content, let me know by hitting the like button and consider subscribing to stay up to date with the latest real estate news, tips, and tricks. Let's start off by talking about the home and how much money the FHA will give you to buy that home. So every year the FHA will evaluate the maximum amount they will lend on a particular home. There are a variety of factors, but let's talk about the top 3 factors. The first factor will be the cost of living in a particular area. This is where you're going to see the biggest swing in prices simply because house prices vary drastically depending on the location. For example, you might be able to get yourself a mini mansion in some places here in Texas, but that same budget can leave you very disappointed in some places like New York City. The next factor that ties into the maximum loan amount is the appraisal. In order to get an FHA loan, you will be required to purchase an appraisal for their home. This just means that a licensed professional that's located in the area will come to do an independent evaluation on how much they believe the home is worth. If the home isn't worth what you're offering, you won't be able to get an FHA loan for that amount. So let's say that you made an offer on a home for $400,000. The appraiser will come to do an evaluation on the home, and let's say they deem the home is worth $380,000. This is where you will need to either renegotiate the price with the seller, make up the difference of the offer price with your own funds, or unfortunately walk away from the home because the FHA will not insure the home for more than what it's worth. The third factor is what type of dwelling unit is the home. FHA not only insures single family homes, but they also insure duplexes, triplexes, and quadplexes. For the first time since the FHA existed, they will now insure homes above $1 million for single family homes. So if you're in a place like in our New York City example, this opens up even more options for you. The rate increase isn't only for high cost of living areas. As you can see here, the maximum loan limits for FHA forward mortgages will rise in over 3,000 counties.
That's what I'm talking about.
This is because of the drastic increase in inflation at the beginning of 2022. So we can take Trenten County for example. This is a popular county here in the Dallas-Fort Worth area. In 2022, the FHA limit for single family homes was right above $450,000, but the limits are jumping all the way to $531,000 in 2023. So as you can see, these rate jumps are happening all over, so you can take advantage of these new limits to get more of the house that you want.
Did you want to fall?
No, I want that one right there.
So now that we've covered how much you can get based on the type of home you want, let's move on to discuss how much money you can get based on your personal qualifications. And at the end of that, we'll go over the costs associated with getting an FHA loan. Okay, so the first qualification we're going to discuss are credit scores. Your credit score is going to determine how much of a down payment you will need to obtain an FHA loan. The most popular option you will hear about is the 3.5% down payment option. To get this down payment option, you will need a FICO score of at least 580. If you don't have that high of a credit score, all hope isn't lost. There is another option available that requires 10% down, but your credit score can be as low as 500.
Really?
If you're someone that doesn't like to use credit and keeps a lot of cash on hand, this can be a great option for you. The next qualification we're going to go over is the debt to income ratio. This is also referred to as your DTI. Now your DTI is a number that expresses how much you owe versus how much you earn on a monthly basis. The amount used to determine how much you earn is actually your gross income, and not your take-home pay. Therefore, it doesn't take into account taxes, 401k distributions, and other things that are taken out of your check before you receive it. To obtain an FHA loan, you will need to have a debt-to-income ratio of less than 43%. And to give you a real-world example of what this will look like, let's take somebody that has an annual salary of $70,000. Now, with a 43% DTI, this will give them around $2,500 a month that they can have going towards any and all debt, and that includes your mortgage. So for instance, if you have a car payment that's $500 a month, now you have $2,000 a month to go towards your mortgage payment. If you have other debt that you are responsible for, you can deduct it from that amount as well. There are some debts that can be taken out of this equation, so be sure to run your specific situation by an FHA approved lender. Okay, so the last qualification that we're going to talk about is your credit history, and then we'll get into the loan costs. Now, there are a lot of myths out there about what will disqualify you from getting an FHA loan. So in this section, we're going to talk about some of those most common myths. The first one we'll talk about is that you can't get an FHA loan if you ever had a bankruptcy. But the truth is, FHA loans are one of the most forgiving loan programs if you've been through this situation. For a Chapter 7 bankruptcy, you can still be considered for the loan if you have a minimum of 2 years of good credit history. Another common one involves foreclosures. If you've had a foreclosure in the past, this doesn't necessarily disqualify you from getting an FHA loan. But this is more on a case-by-case basis, so be sure to discuss it more with your lender. So the last thing we're going to discuss is how much will this loan cost you. With an FHA loan, you will be required to pay something called MIP, which stands for Mortgage Insurance Premium. MIP is an insurance policy that protects the lender in case someone defaults on the loan. You will be required to pay for the insurance policy once at closing and annually. The minimum amount of time that you will be required to pay is 11 years or until you sell the house. Otherwise, you will have to pay for it for the duration of the loan. Here's a chart breaking down how much you will be required to pay on an annual basis. As you can see here, you will pay somewhere between 0.45% and 1.05% of your loan, depending on several factors. When you close on your loan, you will be required to pay 1.75% of your loan amount for MIP. These numbers can change from year to year, so make sure to speak with your lender to get the most up-to-date percentages. Okay, if you've enjoyed the content, let me know by hitting the like button and consider subscribing to stay up to date with the latest real estate news, tips, and tricks. If you have any real estate needs in the Dallas-Fort Worth area, feel free to reach out. My contact information will be in the description below. And until next time, peace.